This conference will now be recorded.
Before we begin, we must provide a disclaimer that the following information provided is not investment advice. Our methods, teachings, and content are for educational purposes only. All materials and lessons are protected assets of Market Making Strategies LLC. All right, so welcome to a question and answers. So basically, what I'm going to start doing, just real simply, is you lot can see my screen here. Now, I know for many of you, you're not day traders per se just yet, or could possibly be considering it after just looking at it. But the main thing to start to even be a day trader is you're going to have access to a day trading platform. And what does that mean? So typically, if you have just a regular brokerage account, you're going to have access to charts and graphs and whatever comes with that type of product. But in order to see real time movement every minute, to see all the buying and selling, as you can see in the prints. So basically, this one here, as you can see my arrow, this would be time and sales. Everything you see here is above 1,000 shares. So if you see 12, 32, 18, this is filtered. So any buying above 1,000 shares on a print would be here. So as you can see, 3,000, 5,000, 1,800. Then on the right of it, this is every single buy or sell as it happens. It could be 1 share, 5 shares, 100 shares, 10,000 shares, it doesn't matter. So when we speak about us being able to base our swing plays or option plays and the foundation being prints, the way that we see prints is we got to have access to this, which is called a day trading platform. And how do you get a day trading platform? Well, for TradeStation, which is a company that we use, it's a Fort Lauderdale-based company, very known national stock brokerage company. For them, you got to have a minimum of $25,000 in the account in order to access this type of platform. Now, you can only see one screen, but just imagine I have 6 screens. This is what we call an execution screen. So let me just explain what an execution screen is. On the far left, you can see this chart. This would be our daily chart. This just gives us an understanding of how the stock is looking, obviously, on a longer term basis. The chart that we focus the most on is the 1 minute chart. The 1 minute is basically telling me what's going on every minute of movement. But more importantly is I then follow what's happening because I see the prints. So I'm able to understand what's going to happen next. Then on the far right, this is what we call a matrix. This is literally all the orders on the bid. So this would be the bid and this would be the ask. The ask is somebody who owns shares and wants to sell it for a certain price. So if you look here, 2,372, that's how many orders or shares are sitting there at $2.91. And as you can see in brackets 3, that means there's 3 different orders or 3 different people sitting and waiting to sell their shares at a price of $2.91. So they are asking $2.91. The people on the bid, it's the opposite. They are looking to buy. So they are putting out an offer that if you have there, that someone could sell to them so they can buy. So this is the matrix. This is the orders, the ask and the bid. This is time and sales. This is every single print that happens instantly every second. So every buying and selling, it doesn't matter if it's 1 share or 10,000 shares. On the left, we have a filter so we can see above 1,000 shares. Why is that important? Because that's how you get to see the spurts of print. So if we just looked at this, for instance, let's have a look if I can find. So right here, you see 358 short-term prints with 360. So this was one spurt. How do you know that? Look at the timestamp, 10:52:38. We can see it's all together. So someone purchased everything from 358 to 360. Now, how much did they purchase? Well, that's 1,000 shares. That's 2,900. That's 1,100. So if you rounded that off right there, you got 4,000 shares. Then you got another 10, 5,000, 7,400, 9,400. So on average, about 11,000 shares this person had bought. So they paid sorry. So they executed on 11,000 shares and they bought everything between 358 and 360. Now, those are good for short term. Now, if we're looking at what we call the major controlling prints, let me see if I can find something here that looks like that. Okay, we don't see anything here. I don't see any. Just trying to find if I can see some prints of that quality that you guys can see. Can anybody see anything that I could use in any other stocks? Because remember, I'm only on one screen here. Is there any stocks that you guys see right now that have major buying at a level that I could pull up? Okay, look, here's one I see right now. So if we looked at Sophie, for instance, you can see 1450. Now we know 50 is a major level, and you can see somebody at 1450 right there. 100 means they bought 10,000 shares. That's 2,000. So basically, to make life simple, someone bought around about 20,000 shares here at 1104.01. If you did Riven, which is what Kevin is saying, I unfortunately can't scroll back. So, but I'm going to assume he's talking about this 1350 here. Now, although it's in red, I'm not sure if it was ask or bid, but looking at the way the movement is, it certainly looks like bid to me. So basically, long story short, just wanted to quickly explain to you guys what our platforms look like and how we are able to see all these prints. You're just seeing one. Now I have another 3 screens which are connected to a second computer, and on there I have simply 6 of these charts with both of these. So if you think about that, think about a minute chart and the time in sales, and I have 6 of those broken up into quadrants. So I can see 18 stocks and follow them at the same time on my second computer. And those 3 screens are at the top. So when we look at anyone who's new to this and they're wondering to themselves, well, I absolutely love this options that we're speaking on. You've watched the basic videos. As I've told you, I'm building out a extremely good options course right now, which will be ready in the next week or two. And we'll have some dates out there, which Milan will put out for when our classes will be next month. But knowing the options is one thing, but a lot of you are going to say, well, if we do not see the prints being called out in a particular stock that we might be watching, how are we able to follow our own positions and monitor all the prints that are coming in and out? Well, the reality is it doesn't have to be TradeStation, but we all use TradeStation because as day traders, we have this is our own layout that we've created, but we also, as you can see, have a lot of analytical tools that were created for us by a past student who then was able to program or code all of this into there. So you can see here we have print line, and print line basically means somebody on January 14th, so today at 9:30 in the morning, had a print of 153,000 shares. Now, it can't tell you whether somebody bought or sold, but you know one thing: this would be a level that could be used because anybody who can buy or sell 153,000 shares right in the open, you'd have to assume there's a chance there's some influence that they could play on that stock. So there's a lot of things that were built into TradeStation that gives us a massive advantage as day traders. So we use TradeStation, but you can use any of these brokerage accounts. I'm not sure what their basics are for their accounts, whether it's 25,000. I have no clue. I've always been with TradeStation, but if you can find other brokerages who will give you access to be able to see real time in sales, real time buying and selling as it happens, and you're able to do that, still being able to set up a very similar type of this. So you need a chart, being able to see your prints. If that's possible at a lower price, feel free to do so. Because I know with TradeStation, you've got to have a minimum of 25,000 in order to have this type of setup. Does anyone have questions on what I'm relating back to in regards to the platform requirements that you need in order to be able to monitor your own stocks and relevant prints? And put your hands up, and Millen, just please let people in. Oh, really? Trevor, please come on and just explain that a bit further. Or if anybody has more information, please come on so you can help everybody out. Oh, apologies. Someone, please come on and speak on it. Millen, please let someone on.
Hey, Doug.
Trev, how
Yeah,
you doing?
good. How are you?
Good, good. Well, this is absolutely some of the best news I've ever heard because just to let you all know, when I first started 10 years ago, Trevor, there was no other option. If you didn't have a $25,000 account, you were never allowed to get any access to this. So that's good. I guess that's changed.
Yeah. Yeah, it's just an easy $10 deposit. After you fill out everything, it could be a cash or a margin account, doesn't matter.
And now, would you be still seeing this? Can you still have the same type of platform or does that work different?
Yep, same exact platform. Um,
Are you
on
serious?
yeah, for the level 2, it'll depend on the stock with what data package you have.
Okay, but the reality is, either way, I mean, what is that data package costing now? If you wanted to have access to all three of the of Nasdaq and everything, what would that cost?
It's like 65 for everything. Um,
So $10 in the account. So let's say you put in 100 or a few $100, and your cost would be about less than $70 a month. Would you say to have full access to see all the prints? Is that right?
that's to see all the matrix data. The prints are, you don't have
The
to pay
prints,
anything
you don't
for
have
the
to pay
prints.
nothing for that. But I'm saying, okay, so for the Matrix, okay, and look, Alex here is only paying $42. I mean, come on. All right, so uh, my apologies. I didn't realize that changed. So that's a million times better. So listen, anyone who is going to get serious about this, go to tradestation.com. It literally, if I'm not mistaken, you could do this in less than 20, 30 minutes, fill out the forms and get your account started. The only thing I will tell you is so that you get full options, just let them know that you've been in options for longer than 3 years. That way, they'll give you all the access and you can do anything you want in options. But the reality is, if you only need to have $10, $20 in your account and you don't even really need to pay anything for the prints because it's just prints, there's absolutely no excuse that all of you do not today open yourselves a TradeStation account. And if you're not going to day trade and you're going to be using it mostly for monitoring prints and using it for swing and options, you can do it off your laptop. You don't even need to have a full setup. That's something you can work your way up to depending upon how serious you become as a trader. But a regular laptop that you have, open an account which takes 30 minutes, put in $100. Now you have absolutely no excuses. And just to let you all know, we are going to create a very short series, and that's going to be done most likely more between David and myself with Millen as well. And we're going to show you the most basic way to look at stocks and monitor prints. And as I have already started teaching and will be teaching you in options, exactly how to read the prints and know small term, mid term, and long term, and how to put all of that into a strategy that will be taught in the option strategy. But in regards to understanding how to do a basic platform layout on your laptop on one screen and have you monitor the stocks that you're interested in, which is most likely the stocks that we are talking about day in, day out. Obviously, you want to go with the highest percentage, and the highest percentage stock would always be what we talk about all the time because we are active day traders and we are actively watching all the prints daily. But you should definitely have your own setup, your own account, so that way you can keep those stocks on your watch list and you can keep an eye and monitor the prints day in, day out yourself. At the end of the day, never rely on somebody else when it's your hard-earned money at work and at play. As they say, an old saying that's one of the best sayings ever is if you give a man a fish today, he'll eat. If you give a man a fish, he'll eat for a day. If you teach a man to fish, he'll eat forever. And it's the same way. Learn the entire process. Learn how to monitor your own stocks. I'll teach you this great option strategy. But if you've got those basics, then you have And for those of you, and a lot of you who do not want to put the time or learn how to day trade, which honestly takes a very long time, a huge commitment, and that's not for everybody, and that's completely understandable. But if you want to learn how to do the swing and options 100% without excuse, you need to have a basic TradeStation account. And if I'm not mistaken, David, do we have the workspaces already uploaded so people can just simply take that and apply it to their TradeStation? David, Milan, anyone, please. Perfect. Okay, so as you can see, David said it's in the chat. He's already got it on there, our workspaces, so you don't even need to build any of this out. You just got to literally go download it and you can upload that and you've got the workspace. I mean, if you look at the total time this is going to take and cost, you could have an account. Total time would take you about less than an hour, even using our workspace to set up, and you need $100. There's absolutely no excuse. So once you have that account, this is what you'll be seeing. Daily chart, minute chart, time and sales. This is a matrix with your orders. And if you're looking right here at the bottom, this is how I execute when I'm buying. So you can see buy, sell, short, cover. And the reason I have two, and we call this a level 2 execution, the reason I have two is, for instance, if I was, let's just say I was trading this, I would want to have one order up here. Obviously, I'm just making this up. So let's say I'd have it at, as you can see, 418. But then I'd also be below in case I need to get out. Because remember, we want to protect our risk before anything else. So I'd have one order here. So let's say great volume came in here. Remember, this is the volume at the bottom. Without volume, us day traders can't trade. And there's no volume here. But let's say this volume came in and it was around 2 million, which basically means it's going into a trading phase over here, let's say. So the volume starts coming in here, and now this is starts showing a bunch of buy-in, let's say, and we can see it here in the prints. And now it wants to trade, and we got a target. I'm making this up completely. And let's say we got a target of 450 first price target. I would put my level 2 at 418 so I can execute when I see it's the right time in order to get into the trade. But I also will have myself at 391 at the bottom. In case it doesn't work out, I can also get out without a problem. And if you look over here, this is just basically all the rapidly rising. So these are the stocks that are moving quickly long. As you can see, 12% here. And then at the bottom, this is all the rapidly falling. So these are the ones that are going down. These are the ones that are getting sold. This is just my watch list. As we know, we looked at AIFF this morning. I traded that in the pre-market. Then we had NNBR. Obviously, we traded that for a bit. And then this is just what Kevin was talking about. This at the bottom is my orders, and it shows when I'm in a position. So it's such a basic setup, but you absolutely are going to need this if you're going to be doing options and swing. If you plan to put the time, effort in, and you really want to be a day trader, we're going to be doing some basic courses, but that's something that we're going to be bringing on later on in the year once we see how many people are really interested, because that's a very high level courses. But just to do your basic options and swing strategy, please, you've got to get on this. If you have any questions, feel free to send a DM to David or Milan. They'd be more than happy to help you. What I would suggest we might do also, Milan, David, we could do a very quick video tutorial explaining to students exactly the processes they need to take to set up the TradeStation account and then be able to watch prints and then formally understand how that works. So once I start the options classes next month, it'll be a lot more seamless. Make sense? Now, it's a Q&A. Feel free to ask me anything you want. There's obviously questions, there's things that are coming in your way, any puzzles or any areas of concern you have. This is your time right now. I do have to leave here at 11:45. So we've got a good 25 minutes, I'm sorry. So Any questions?
Hey Doug, I have a question.
Yeah, go for it, Trev.
So, in a swing trade, how do you know when to manage before the price target hits? And the example that comes to mind is ACHR.
All right, you do realize that's a big question.
It is. It might take the whole time, but
I'm not going to be able to completely do that because you've got to learn the strategy. So look, what did I tell you all? So part of the option strategy that we'll be teaching you is bringing in the element of the unknown. Because the reality is there's going to be times in the year that the chances that there'll be a sell-off are going to be a lot higher. Now, I told you all that typically they'll run the market in December all the way up, and we know there's an inauguration coming at the end of January. And for the most part, what did I tell you all last month happens in January? And this is what we know history has told us in the market. And when I say history, I usually like to go back to the last 10 years max. What did I tell you all in December? Who remembers?
sell off in January.
Did I not tell you all this? Did I not tell you all? How many times have I told you all that according to what I did and what my research tells me is that we're going to have a run up in December and you can watch in January, it's going to go all the way back down and sell off right before his inauguration. Well, that was it. So the problem is, even if your position hasn't technically hit your target, do you think we have to take into consideration the overall market personality depending on the calendar time? Do you think we do?
Absolutely.
And that's the reality, right? Because they're going to do that. Now, we plan our targets based upon the buying to a high percentage. But you got to remember something. I gave you all a clear warning that, in my opinion, it is going to come down in January. So, what do you think you need to do at some point when you believe that that time is now ticking? Whether you've hit your target, whether you're, up a bunch, whatever the case may be, you got to start managing. Everything we do is percentages. So as much as that trade has a high percentage ability to hit its price target, when there's an extremely high percentage chance that the entire market will sell off, who wins? And who do you take more notice of? The entire market. Because the reality is this: do you think the calculation or the formula or program that they've created for that one or two trades is going to be stronger than when they told the entire market and they told the entire algorithms to say, right, we need to sell it all back down 5%? Who wins? Obviously, they're going to pull it back. And let me ask you something. When they pull it back, what do you think they're doing? And we can see this in the prints. What are we taking note of on the sell-offs? What's the first thing we must take note of when we see all these sell-offs?
Whether or not it's getting buying on the way down, essentially.
There you go.
Pre-buy.
Yeah, you're spot on. Are they getting buying on the way down? Because if there's buying on the way down, once the sell-off is complete, have you guys noticed how quickly stocks can come right back to where they were? Even within a week, it can go from a month to 2 months of slowly selling off. But the reality is, if it came back really quickly, do you think they were just simply selling it all off, or they were selling it down to acquire more?
Like I'm selling it down to acquire more at a lower price.
Yeah, because here's the reality you got to look at. Is if I buy it lower today and I've got all year to play the market, the gains that I can show my investors, if I was a hedge fund, if I was an investment group, if I was a bank, would that be better or worse if I started at a lower price point in January and worked my way up in December? It would be a lot better. How much higher can you go from the top and you're starting in January? So a bit of common sense has to kick in. You got to just think about it as if nothing ever changes, no matter what you're doing. When you look at our method of trading, which is always following, which is always basing our strategies off market makers, then what would a market maker do? Remember, market makers in the end, their job is to make money, and nearly every single time they're doing it from a big pool of resources from investors. Those investors want to see returns. If they don't see returns, what do those investors do with their massive amounts of money?
Elsewhere.
They pull it. They back out and they pull it. So the easiest thing to do, imagine this. If in 2-3 weeks you dropped all the stocks all the way back down, as you can see, just look at ACHR, 12, all the way down to 8. Bit of quick math. How big is that of a pullback, percentage-wise?
25%.
How much?
25.
No.
Ish.
33%.
33. There we go.
Right? 33%. Now let me ask you something. Just by going back from 8 to 12 is a 33% gain. Is that what something investors would like to see, Trevor?
Yes, absolutely.
That's how it works. Gentlemen, ladies, you can't forget these are real companies. Market makers are tasked with performing, with giving returns. It's so easy to get lost in just seeing this as a complete game without realizing, yes, it's a game, which makes it easier for us to not put money towards it. But is it a game with heavy consequences? Who thinks it's a game with heavy consequences for either retail, for market makers, for anyone involved? Do you think it's a game with high consequences?
Yeah, it is.
So remember that. So when you guys are trading, in the back of your mind, something that should always be ticking, a light bulb that should always be flickering and on, is at the end of the day, they are going to work strategies that make sure that they appease their investors. So at the end of the year, you're filing your taxes, but at the end of the year, investors are also getting a year-end report to see how well they've performed on their positions, on their money. So what's the best thing to do at the end of the year? Tell me, run it up or sell it off?
Run it up.
Run it up. You're going to show a better percentage return. Now let me ask you another question. Some of you might say, yeah, but if you run it up at the end of the year, you've got to pay higher tax. Are they paying tax? Does tax matter when you're getting paid off somebody else's money? Think about it. Would I be okay paying 30% more on my gains if Trevor gave me $1 billion to trade? Do I really care? I get his $1 billion. He gives me the resources, an ample amount in order to manipulate stocks. Do you think I'm going to work to get another 5-6% out of that? Because I'm going to get 20% of all profits. Does it make sense for me to run those stocks up towards the end of the year? Yes or no?
Absolutely. That's more money in your pocket.
Yeah, and I'm playing with yours anyway. It doesn't matter. We know we got to pay tax, but the reality is I'd rather pay tax on more money than less. And then what do I do? January comes, I will drop it all the way down, sell off my positions, acquire again, build it up throughout the year, and then we go for another move. So remember, time of the calendar, where we are in the calendar is also very important. Let me ask you guys another one. Tell me another important time that happens 4 times a year that you've got to be extremely careful about your swings and options. Can you guys tell me what that is? Earnings. Thank you, Alex. Why is earnings important? Somebody else come on, please. Thanks, Trevor. I want to hear from a lot more people. Somebody come on and explain to me, why could earnings be something that you must take into account in your positions? Come on. The more you speak, the better you get. I've told you guys before, information is retained something like 17 times or 20 times better when you speak it out. I could keep speaking all day, but as you guys know, I kind of know how to trade already. Okay, we've got some shy people here. To 2025, everyone, let's stop being so shy. Start speaking more. So earnings clearly can completely and utterly change, even if there was huge amounts of buying and we have a great price target, we're moving correctly directionally, because you just have no clue how the market will react to what we don't know. How many times have you guys heard earnings beat on every facet available? Top line, bottom line, growth, percentage in departments, new products, and yet it dropped. How many of you seen that? Let me ask you another question, and this is what I find so funny when it comes to common sense. If everything is great, yes, for the short term, everybody will jump in and get along and take it to that level. But wouldn't it make more sense to do the opposite and take everybody's shares by selling it off and then running it back after a few days or a week or two? Or does it make sense to just, for the market makers, to buy everything straight away with great earnings and show and just execute on a higher price? Or does it just make more sense to sell it? Basically, what you end up doing is you're scaring off retail. They're confused and don't understand what happened. And what does retail always do? And I tell you how I know this. One of the ways that I really understand the retail mindset is I read all of these blogs and forums and all the apps that have commentary, Yahoo Finance. Do you know what people always do when they're wrong? Think about this. What do you think people always will try to do first when they are simply not right or wrong? What do we always want to do? Not deny it. Make an excuse. And then the excuse turns into their reason. And when it turns into their reason, they believe they are no longer wrong. So they justify it. So even when they're like, oh, the earnings were great, but it dropped, the first thing you'll start seeing retail say is, oh, I think they expected it to be a bit better. They should have done a bit better. They can't even justify what they're doing. But can we justify that if everything is the way it should be, if they're beating on all top line, bottom line, if they're saying that the future looks better, that we could beat what we have earlier predicted as the revenue outlook? A bit of common sense tells you if all of that is in line, why would I run the stock up straight away? I'd rather confuse retail to selling all their shares to me. I can take a bunch more at a lower price. And then once I run it back up, do you think retail sits within their justifiable excuse? Or does that now get turned into a new excuse and says, I told you, I knew it was great. They were just making all the weak hands sell. Who's heard all this stuff? It's ridiculous, but guess what? It might be ridiculous, but what do we really enjoy as followers of market traders is that the consistency in the retail mindset is always going to be there. They all speak the same language. They all follow the same tune. And if you've noticed, it gets far worse. Now you've got a plethora of retail because of all ages. You can access the market at anywhere. You can get on Robinhood, you can get on all these different apps and different sites and companies. You have to be 18 years old and you can put $50 or $10 into an account. It's at the fingertips. Anyone and everyone can play the game of trading. And so now you've got all these people, and the first thing that everyone does, see, when before it was at your fingertips, as Millen just said, you had to open an account, you had to buy a computer, you had to get online, you had to do all these things and have singular focus. The problem is now is nobody has any form of attention because it's at your fingertips, but more importantly is you have about 100 other things in that phone that are taking your attention, from social media to games, to puzzles, to girlfriends, to dating apps, to you name it. So do you think most people or retail traders are coming to put in the effort and the work that it takes to be a follower? Or do you think most of them are just reading what everybody else is saying and believe if we all think the same, there's a good chance the stock will go in the same direction? Do you think it's easier for people today, especially youngsters, to formulate a game plan like that because they have no connections to anything, but they have connections to everything? What do you think? They don't want to do the work. And that's why I'm teaching all of you that even though you don't need to put in the 10, 11 years that I did to become the day trader I am, David, how long you been a day trader from day one? I think David's been around 5 years, 6 years maybe. I can't remember quite, but I know 6 years. There you go. So David's been around 6 years. And as you all know, I know David from day one as a trader. So David can tell you the amount of effort and work to become a successful day trader is endless. It never ends, and it is absolute commitment. But the beautiful thing that through my 11 years as a trader and David's 7 is we're combining it in such a way that all the years of effort that we put in, and as you guys might not know this, 93% of day traders fail. That does not mean that 7% even make money. It's that 7% might just float. Very few are successful as day traders. I made it to an extremely high level, which is very few, and David made it to an extremely high level. But what we've been able to do from all our learning and everything that I've deciphered as well is to create a far simple system for all of you lot to understand. That's why we're telling you a basic setup, even on your laptop, so that you can be taught how to just understand and read the prints that pertain to the stocks that you're interested in, that we're discussing as a group. Is going to be so simple, and then you can input that into this really detailed option strategy that I'll be teaching you. But as going back to what Trevor's saying, you always look at everything you do in percentages. So knowing that there's a very high percentage chance in January of a sell-off, that will always trump, yes, I know I had to use that word, that will always trump one market maker or 5 market makers looking for 1 or 2 stocks to hit a price target. Make a note of that. You always have to be aware if there's a higher percentage variable that could change your trade, even if it's high percentage. If earnings are coming up and you're well up in your trade, you're nearly at your price target, but earnings is the next day and they completely mess up, or they say in their earnings that, well, we just got sued for $2 billion. Do you think that's going to help you, or instantly go against you? And when it goes against you, there's a good chance your market maker's getting out too. Because at the end of the day, if they hear news that they weren't prepared for or they are unaware of, do you think they're going to sit in there and wait for that to get passed and then hit their target, or do you think they're getting out? They're going to get out right away. Doesn't mean they're not going to get back in. But remember, they can control the stock for the most part. So why would they even bother? They'll get out, let everybody sell off. And then guess what? As long as they see it as a short-term situation, they'll just buy back in at a lower price and hold it if they really still believe in the long-term future of the company. So going back to that, I always say, and that's why one of my rules is how much should you, without even thinking. Now, this is my rule. It's a very high rule. So for me, the non-negotiable is if you are 300% up, you must always take 50% off. That's a non-negotiable. But you don't have to wait for 300%. Let me ask you guys, if you are at 100%, nothing has changed, you're still seeing buying, you're going towards your price target, but is there anything wrong if the stock is up 100% for you to take 50% off? Because if you take 50% off, whose money are you now playing with? You're playing with house money. So you can have that rule. Or you can have you can have a rule of at 100% I want to take or look at taking 50% off. Or you can have a rule that at 150%, for instance, I must take 50% off. That takes my investment out, and overall, whatever happens, I will have a profitable position, a profitable situation. So you can tender that how you want it. For me, the non-negotiable is 300%. But let me ask you, do I sit there and wait for it to go to 300%? And if it doesn't, I take a full loss? Or am I also watching how things are playing out? Do you think sometimes I'll take 70, 80, 120, 150% and take most of it off if I'm seeing other variables could trump my trade? Do you think I'm doing that? Perfect. As Milan said, I'm actively managing based on the data, which is why it's so vital that even on a basic setup, you're watching your stocks daily. Even if you're at work, if you work from home, you're studying or learning or whatever it may be, have a laptop and watch your stocks. It's your responsibility. We've taught you the system, but it's not our responsibility to tell you when to get in and out. Your responsibility is to learn the system and manage your positions. Do we all agree with that sentiment? Only GP Stocks agrees. Brilliant. So, just to finish this part off, get on TradeStation. Speak to Milan, speak to David if you have any questions. It takes literally 10-15 minutes to open an account. Put $50 in there. That will give you access to then have a platform. Put the platform on a computer or a laptop. Then use the workspace that we have provided. We have the template already in Discord. Download it, and you now have the ability to see what I see, put your stocks in that we're actively talking about, and watch the prints and make notes. Now, as we're doing the options classes next month, I will have an actual template that you can fill out that will give you all the information and place it for you in the template. And it will also have a recap at the end where you get to learn from what you did, any issues or mistakes that you need to learn from and correct. So I will be providing that entire thing for you. But get the TradeStation set up and be ready for next month. Because at the end of the day, like I said, it's your hard-earned money. Don't let anybody else manage it for you. So that's me, and that's the Q&A done. If you guys have any questions, I've still got another 5 minutes. Does anybody have a question? No dumb questions. So, yeah, there's no dumb questions here, Jamie. Is there a reason to use bar chart over candles? So, as day traders, all that candle stuff is just pretty glossy and quite honestly a hindrance. It's a pain. We're not even bothered about the chart, if I have to be honest with you, Jamie. The chart is simply used for points and areas that we must pay attention to. High of day, low of day, where there's huge prints, huge buying, huge selling, triple tops, double tops. That's the only thing we care for. Because the reality is all the information that we need about where the stock is going to be in our prints. Remember, at the end of the day, a chart is everything that's already happened. I can't base anything that's going to happen in the future off the chart. I can base that off what the prints are telling me. So if like I tell anyone, do whatever makes you most comfortable. So if you like candles, use candles. whatever makes you comfortable. And if you're not going to be a day trader and you're going to learn the options or the swing strategy, now remember, it's the same thing. Swing strategy is the overall name. Options is the instrument used to play that swing strategy. So you can buy shares, take options, whatever you want to do. But yeah, just create it whatever makes you comfortable. So yeah, whatever you enjoy. Any other questions? Okay, well that wraps up our Q&A for today. And as I said to you lot, I've been working endlessly on the options, and I am really excited to have it all ready. Millen will be putting out dates either this week or next week, but be prepared. Options will start either the first or second week of February, and it will run for 2 weeks. It is detailed. There is a lot of material. I will keep it and make it as simple as I can, but be prepared and make sure if you're able to take the time out so you can really invest yourself into this 2 week course, because it's going to be amazing. So that being said, hope you all have a lovely morning and the rest of your day, and I'll talk to you in the room. Thank you very much.